Good afternoon, everybody. Here we are, Monday, 6th of August 2018. It's Paul Wallace here, and here for the sort of second of our sessions on mastering the 4 M's of trading. Lots for us to talk about today, but as always, I'll just start with a quick risk disclosure, and then we'll move on to the meat of our particular session. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. And you can find out more information at admiralmarkets.com. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 85% of retail investors account lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. So, ladies and gentlemen, before we talk about the main thrust of our session today, as always, we're just chatting about, why Admiral Markets UK. Admiral Markets provide a fantastic range of instruments and services to their both retail and professional clients. In particular, they're exceptionally competitive on trading the DAX 30, which is a enormously popular instrument with here both globally, but particularly here in the UK and Europe, and the typical spread for DAX is 0.8 points during the main trading hours, which make them exceptionally competitive. They also offer both MT4 and MT5, and in particular they offer the MetaTrader Supreme Edition within those, which are fantastic tools for the trader to sort of take on board. So, ladies and gentlemen, as I said, I'm Paul Wallace. Okay, who am I? For those of you just joining us for the first time, well, everyone has to have a little bit of an I love me slide. My background is that actually I sort of was in the Air Force, and then I transitioned out of the Air Force into working into the city into the late 90s, started trading equities during the dot-com boom, and then invariably sort of moved from there in towards trading FX indices and commodities primarily, and have traded for myself, for funds, okay, and I also sort of started to help support in the development of particular traders. I'm very fortunate. I get to spend my time sort of between London, Cheshire, and Ireland with sort of a farm there. So I will be off doing a bit of harvesting later this month. But that's how I came myself to be a trader. So I've had the fortune of working with traders over the last 10 years from complete beginners, okay, sort of just completely new to trading, working to guys and girls who are running sort of $200 million books at tier 1 banks, etc. So a lot of experience in in trading instruments, but also in actually helping support and develop traders as well, which kind of brings us on to our our main source for today, ladies and gentlemen, which is is about helping you sort of learn and master the 4 M's of trade. Well, primarily, I describe myself as a discretionary-based method trader. That will become more apparent as we go through these sessions over the next few weeks and months. Primarily, I like to be a swing trader, so some of my trades are open between for a few hours to a few days, occasionally a few weeks to a few months depending upon my outlook. I am very, very big on simplicity because I am a fear-based trader. Most people are either a fear-based trader or a greed-based trader. A fear-based trader, I just need to keep it simple so that actually, I know exactly what I'm doing so that there is no opportunity to hesitate when action is required. I talk about, my own decision making comes from a mixture of fundamentals, technical sentiment, and geopolitics. That's actually going to be one of the sort of main thrusts of today's session. So understanding that, and primarily, I look to sort of trade FX indices and commodities. A little bit of crypto, a little bit of equities, okay, but primarily the main thrust is FX indices and commodities. And in commodities, it's primarily mostly gold that I will trade. Within, especially the FX markets, my own trading philosophy is I want to be buying strength and selling weakness. I am I look to myself as being almost like a one-man hedge fund, okay, and that's another one of the thrusts of today's conversations is about I'm looking to sort of buy strength, sell weakness within the FX markets. And over the next few sessions, I will talk about how I actually do that. So, that's my overall, let's say, my philosophy, my strategy, and my tactics are about to basically to use pullbacks for entries, just using very simple sort of price action to give me my triggers, looking to trade in line with the sort of strength, trend, and momentum. You'll find that I love working on weekly charts and then looking to sort of execute and manage on daily and 4-hourly charts. Okay, so that's how I look and engage with the market primarily as when I'm operating as a swing trader, but also as an intraday trader. Okay, I'm almost kind of a little bit the opposite for sort of swing and position trading. I like to be primarily a trend trader, which I'm going to talk about today. And my intraday trading, I'm primarily a mean reversion trader. Okay, I like to see price overextend and then reverse and come back to the mean, and that's where my intraday trading mostly has its focus. And over these sessions, so, ladies and gentlemen, that's what we're going to be looking about. We're going to be talking about that as all part of the sort of the bigger picture of the 4Ms of trading. What do I have in terms of expectations for our sessions? Well, it's for me here to educate you about the 4Ms of trading, okay? So that you're able to go away and, to begin with, just to analyze, any market and be ready to trade it and to manage risk within that, okay? And generally just being able to sort of raise your self-awareness about managing risk and managing yourself. For yourselves, in terms of expectation, I appreciate that when I run sessions like this, that there is there's a broad range of experience, ladies and gentlemen. Okay, I appreciate that we'll have some people joining us who are very, very new to trading. There will be some people here who are who've got a great deal of experience. So I would ask that you would bear with me. I'm trying to sort of help everybody that I can, but I also appreciate that sometimes I can't go into certain elements as deeply as maybe people would like. But what I'd be saying is, if there are questions that come up after these sessions, or if you're watching these sessions on the sort of the YouTube channel, well then invariably, by all means, don't be afraid to get in touch with your account specialist at Admiral Markets, and they'll be very, very happy to sort of talk you through and help you with any of the particular questions you have. That also links into, there's a little bit of time limitations. We're here for about 45 minutes every Monday. Okay, I'm trader with lots of experience. I could talk for days and days and days about particular ideas or concepts, but I appreciate that we have limits upon our time. So I would ask you to please forgive me if I am unable to go into as much detail as perhaps you'd like. As I said, that limits me on the breadth and depth of the topics, but there is still within trading in the 4Ms of trading, there is still huge amounts that we can all sort of cover, we can look upon, we can utilize, and hopefully you can take away and start to develop into your own particular trading plans. Okay, I want to in particular give you some ideas and concepts and start to get you to think about how you engage with the markets, but also provide you with throughout the sessions as we go, focusing on some tools that you can use tomorrow, because realistically that's what you need, isn't it? It's you want to be able to take one or two little things away that you could look at a chart tomorrow and actually start to make those decisions. So that's where I look at it as our expectations for our sessions as we go through these this wonderful time together. So the 4Ms of trading. Now, for those of you who either joined last week or watched the video afterwards, I went through in much more detail each of those particular 4Ms, and that's I would recommend, please, that you can go back and watch that if you want to sort of get a greater detail. I'm just going to be touching upon them every week and talking about one or two of those particular 4Ms in particular. And the reason I like to look at this is that I've got a lot of experience, as I said, of trading markets and also of working with traders. And what I find is that the traders who do well, they're ones who are mastering these 4Ms of trading. Okay, they're mastering the markets, their method, their money management, and managing myself. Okay, and it's I talk about it's almost like a little bit of a sweet spot. Okay, when traders are trading well, it tends to be that all four of those areas are being looked after well. They're all being managed well. Okay, if you're having a little challenge with your trading, and everybody does, we're human, we have those challenges. If you're having a little challenge with your trading, then you can bet your life that probably one of those areas, or maybe even more than one of them, is struggling a little bit, and that's okay. Part of it is about recognizing and having, hopefully through these sessions, about having the self-awareness, okay, raise self-awareness with yourselves to be able to sort of take a little bit of time to sort of understand where you may be having a little challenge, and what you could do to actually turn that around. So it's definitely, human beings, okay, and men in particular, we like to think that actually all we need is just a simple trading strategy, and that's it. We're off to sort of engage with the markets happily. But actually, as you become more experienced, as you have, as you grow in terms of your knowledge and understanding of those markets, well, then invariably, you'll be about recognizing the value of understanding markets, method, money, and myself. All right. Today's sessions, we're going to focus a little bit on markets and method, okay. And what you'll find is over those sessions, I'll be sort of trying to focus on one or two of them, talking you through them, educating you them, raising your your knowledge and awareness about them. And then what we'll do is we'll switch across to the Admiral MetaTrader 4 Supreme Edition, and we'll take what we're talking about and just look at that in terms of the bigger picture, actually looking at instruments and and sort of seeing how we can start to, over these sessions, week by week, build up our own trading plan, our own trading business, and look about how we can master those 4 M's of trading. So in particular for markets today, I've talked about, okay, very briefly, that there's lots of different markets, okay. And when I speak to traders, when I talk to them and ask them about it, what I'm trying to understand is, does that trader really understand what markets are available to them, and are they actually trading the right markets for themselves in terms of the capital they have to work with, their own sort of their own kind of money management and risk profile, their own particular trading method, and also their own particular personality, okay. So if you're let's say a very highly strung, anxious person, well, then trading very sort of very fast, very dynamic, very fluid markets might not necessarily be the sort of the right fit for the individual. So it's about what I need to know is to recognize that that trader has an understanding, okay, of where understanding about equities, indices, commodities, FX, bonds, and crypto markets, and about understanding whether they are actually trading the right one for themselves, about understanding who they are and what their particular aims and expectations are. Also, and just one of the very simplest things we're going to talk about today is, I need to know that that trader can actually, understand the sort of particular market environment we find ourselves in. They're able to sort of identify, okay, very simply and very quickly, whether that market is trending, or whether that market is in a range-bound environment. And that kind of leads on to the method, and I touched upon this last week's session, ladies and gentlemen, about how you might have a trending method, okay, but if the market you're trading is range bound, well, then it doesn't really matter how great that trending market method is, because actually the market environment isn't going to support you in there. Remember what I was saying just a slide or two back, it's when all of those 4 elements are in alignment that we tend to sort of have the opportunity to sort of deliver our best performance. So I like to see that traders can show me that they can identify what kind of environment that market is in, okay, and that they also know which particular market environment actually works best for themselves, which is the one that actually helps and support them in their own particular trading styles. So I'm going to make a little bit of a just I'm going to start with, for most new traders, okay, what I would like to sort of focus on them is being able to sort of be a trend trader. I myself, as I say, for my swing trades, I'm particularly a dominant trend trader. What I often find though is quite often new traders, they want to trade reversals because because basically their ego tells them they want to they want to call the top in the market or the bottom in the market, because it feeds into their ego. But the reality is that for new traders, what I'd like to sort of suggest is that as they acquire experience and knowledge and understanding of markets, that to begin with, having a very, very simple, robust way to be able to define whether that particular instrument's in a trend and then be able to trade with that trend is a good starting block. All right. Now, this might be quite simplistic, but when we're going to look at a chart in a moment, it's a simple case of if it's price going up, well, then that chart is in an uptrend, And as a, let's say, as a new trend trader, well, swing trader, we'd be looking to be a buyer. That might sound overly simplistic for people who've been trading a while, but you'd be surprised at how many people forget that. Okay, maybe how many people forget that kind of the most simple of concepts. Okay, understanding about is there a trend? If that market is going up, if that market is bullish, well then realistically we want to be a buyer. Okay, we want to be a buyer. We don't want to be fighting the market. Okay, all right. Especially if you're a new trader, finding your feet, trying to make sense of it all. Just we want to be looking at chart. If that market is going up, we want to be a buyer, and we keep it as simple as that. Human beings, and I include myself in this. I'm quite happy to talk about my own trading style is human beings, and myself included, we often have a tendency to overcomplicate things. Okay, to make things harder than they need to be. Okay, and trading is very much like that. Trading, we could make trading as hard as you want it to be. And actually, as maybe you remember a few slides back, I said, for me, simplicity is key. I just want to keep it as simple as possible, because that's what tends to allow me to operate at my best levels. So, in terms of very simple concepts or theories, markets going up, we're defining an uptrend, okay, by a series of higher highs and higher lows, okay. Every time, price makes a new high, every time price makes a new, higher low, well, then that is just confirming that, we're in an uptrend, okay. And if that market is bullish, then we particularly want to be a buyer. I know that might sound simplistic, but it's as I said, you'd be surprised how many people actually forget about this. And and we'll touch upon this more when we switch across to the MetaTrader platform. But it's it's never a bad thing just to be reminded of these most sort of simple yet important of concepts. So on the flip side, all right, if we're looking at a chart in particular and we see that price is going down, well, that chart's in a downtrend, and we were looking to be a seller, all right. Now, I appreciate that some people, especially when it comes to trading equities, some people have a let's call it like let's say like a moral challenge with being a seller of a stock, okay, because they for moral reasons they don't feel that they wish to be to sort of partaking in a company's sort of lowering of their share price. For myself, I am primarily a short trader. About 2/3 of my trades will come down as short trades. Okay, it just seems to. I see short trades much easier than I see long trades. Okay, and that's just me over years and years of keeping good records of how I'm trading and recognizing what my particular where my particular areas of expertise are. Okay, but as I said, it's keeping things simple. If that market is going down, okay, then it's in a downtrend, and we're looking to be a seller. It's as you gain experience, as you gain sort of hard won, hard fought experience, that's when perhaps the opportunity to effectively to learn and understand how reversals may happen, that can add to your trading, let's call it your trading armory, okay, as you go. But the reality is, to begin with, let's keep it simple. All right, let's just have we look at an instrument, doesn't really matter what it is, okay. If we want to be able to identify if there's a trend, if there is a trend, well, we're going to look to trade with the trend. If there isn't, we're going to do nothing. Keep it as simple as possible. Not surprisingly, okay, downtrends defined as a series of lower highs and lower lows, all right. And the very simple thing about it is that trends should leap off the chart at you. Okay, trends should leap off the chart at you. All right. If you're struggling to see if that particular instrument you're looking at, whether it be 5-minute euro dollar, or or daily on Bitcoin, or weekly on wheat, okay, if the sort of the trend should be leaping off the page at you. If it is not leaping off the page at you, well, then I'll let you in a little bit of advice. There's probably no trend. Okay, if you're having to struggle, or you're having to force it to sort of see that there might be a trend there, I'll give you some advice. The trend isn't there. Okay, give it a miss. Go and find an instrument that is trending, okay, rather than trying to force your particular ideas onto the market, because that that rarely works well. So that's just a little bit more on the market side that we looked at last week, okay. And in terms of method, some of the elements that fill into that method, Well, not surprisingly, method is it's the most popular focus. Okay, so I run a couple of like traders events in London and Dublin, and there'll be somewhere between about 50 to 100 people go to these events. And the reason I mention it is because when new traders are there, what they want to do is they all traders, they love talking about their method. Okay, they love talking about their method with other traders. Okay, they might call it a system, they might call it a strategy, they might call it a tactic, but it's realistically it's their method, it's their way of actually pulling the trigger, engaging with markets. Traders love talking about it. Traders, they all want to know about how the other guy, is making his trading decisions. What's she doing to be a trader of Bitcoin, etc. Everybody loves talking about it. Okay, and so it has the most popular focus. And if you go on to the internet and and you sort of if you search for an trading strategy, you'll find thousands. There'll be thousands on there, I'm sure of it. Okay. But it's about recognizing that it's just one part of those 4 M's. Okay, it's one part of those 4 M's, and actually, for let's say for experienced professional traders, it actually becomes much less important. Okay, the other areas, the markets, the money management, the managing myself, they take on a higher priority. But when we begin as new traders, everybody wants to have that exciting new trading strategy, which they think is going to be the key to success. Within that, it's about at these kind of trading events I run, half the room, okay, well maybe not half the room, but a big portion of the room in one corner will be talking about how they use fundamental analysis to make their trading decisions, about understanding the underlying economic indicators within, whether it be a company, whether it be a country, whether it be a currency, a region, etc. They will use that to make their decisions. Other side of the room will be all the technical analysts, okay, all looking to use charts, all right, to make their decisions. Maybe in another small corner you might have the sentiment analysis to it, which is really about understanding sort of the just another word for confidence, really. Okay, but very often what you find is the never the twain will meet. Okay, they'll happily think their way is the only way. Okay, and anyone else who makes uses any kind of form of analysis is a fool. My own view is a case of you use what works. Okay, my own view, I think I showed it a few slides back, is I like to meld quite a few ideas together, from sentiment, technical, fundamental, and also geopolitical. Okay, all coming together to allow me to make a decision on what to do. And we just talked about it in terms of the markets element, is that it's about recognizing is your trading method suitable for trend following or range bound. As I said, if you use primarily a range bound trading method, but the market you're trading is in a trending environment, well, it doesn't matter how great your trading method is. It's gonna underperform. Okay. There are also other ways. For new traders, you might hear people talking about arbitrage. Okay, as a general rule, for let's call it for private traders, that's not really a trading standard or style that has any true relevance to ourselves. Very big in the kind of the HFT world, high frequency trading world. Okay, but for private traders, you'll hear it pushed about, but as a general, it's not really a suitable trading sort of style or method for ourselves. But what can often be is you'll hear people talk about having an event-driven trading method. So that might be formal or informal event-driven. So formal might be just basically trading the particular news elements that come out on the economic calendar, which we'll talk about next week's session. We'll go into the economic calendar in particular next week's session. So that might be like formal news announcements that your traders can follow and that will actually try to trade around. And then there's also there's informal events. Okay, so there might be an informal event on an economic basis, or or these days it could be that Donald Trump sends out a tweet. Okay, or yesterday I think Liam Fox talked about the kind of increase in possibility of a no deal Brexit, and not surprisingly that then had a knock-on effect to sterling overnight and into this morning's session. Okay, so there's it's an event-driven is very possible or very plausible as a way to let's say as a driver of how you might engage with markets. And there at the bottom, what I've just put is a little bit that everything works and nothing works, and that's not me just trying to be too glib. It's a case of it's all about context. Okay, it's all about context. All right, as you've probably heard me say, right, if the market is trend following and you're operating a trend following method at a time, well, then your opportunity to deliver increases. Okay, it's whereas if you're in a trend following market but you're trading a range bound method, you will struggle. Okay, it's about having that everything works and nothing works. It's about the context. And part of your job as a trader is to maybe take a little bit of a step back and start to make good decisions about the actual overall context, and be able to sort of amend your style based upon what the market is communicating to you. So as I said, kind of 4 horsemen of analysis. I put this chart up, all right. Technical, fundamental, sentiment, geopolitical, and I put it up as a little bit of a humorous slide. Okay, when I do media slots and talk about it, what I mean is that that very often people can get very, very, very caught up in the sort of they go down the rabbit warren of learning everything they can about technical analysis or sentiment or fundamental, etc. Okay, it's very easy to become very let's call it like almost like tunnel visioned about your particular style of analysis to the markets. And it's about recognizing that actually that they all have everything works and nothing works. It's about learning to be able to meld all of these ideas into a place that allows you to make a decision about what you need to do. And that's the message and the story I'd like to get across to you, ladies and gentlemen. Right? Okay. As I said, those events I run, there's always debate about which is the best. But what I want you to take away is that the reality is that it's nothing more than a decision-making framework. That's it. Okay, that's it. I just want you to sort of let that hammer home. Okay. The question is, it's a decision-making framework that you have that sort of allows you, when you look at any instrument, am I going to be a buyer? Am I going to be a seller, or am I going to sit on my hands? And that's it. And that is it. Remember what I said back at one of the first few slides, is that simplicity is key. And I truly, truly believe that. Okay. And I also said that very often humans and men in particular, we overcomplicate things. Okay. We try to make things harder than they need to be. And it's, and trading is very much like that. And it is actually, when you boil it all down, it's a case of, am I going to be a buyer, am I going to be a seller, or am I going to do nothing? Okay. And it's about finding a simple, robust, objective, and consistent way to make one of those 3 decisions, and that's it. Okay. And that's what you can meld all of those areas of geopolitics, sentiment, technical, fundamental, to have your own little decision-making framework that allows you to make one of those 3 decisions. And once you make it very simple, almost like a little process with almost like a little checklist, it actually becomes much easier for you to operate as a trader, because it removes the sort of weight from your shoulders to be able to sort of come up with the sort of the superstar trade idea. It's about just having a little bit of a simple process that allows you to identify, yes, this instrument's in a it's in a trend. Okay, it's trending up. Okay, so it's trending up, then I'm looking to be a buyer, and and then it's a case of, well, we can, which we'll talk about, is actually having a couple of ways that can be our trigger into that particular trade. Okay, so we like to keep it nice and simple. Here's a great quote from he's kind of my professional hero, Paul Tudor Jones. All right, it's he's a super successful trader. He's touched upon in the first Market Wizards book, which is always worth a read. Okay, there's a great quote from him here. You may think you're in the business of trading, but in reality, you're in the business of decision making. And the better you can make those decisions ahead of time, the better your results will be. And after years of trading and working with traders, I can tell you, PTJ, Paul Tudor Jones, is absolutely spot on the money there. Okay, you're in the business of decision making, so make it as easy for yourself as you can, ladies and gentlemen. All right, make it as simple and as easy as you can to make good decisions. Okay, learn from both your let's say your challenging decisions, learn from your good decisions, and just after trade, you'll just get better and better and better. And that's what we're particularly looking to work towards. And these sessions, as we go from week to week to week, it'll all be about sort of adding those layers. Okay, slowly but surely bringing those those levels to bear to allow you to sort of make better decisions. Okay, because if you're making better decisions, well, then the likelihood is your outcomes are going to be better as well. So just upon that, you've heard me talk about how simplicity is key. All right, where does a new trader focus? Well, the internet, as I put there, is provided access to stunning amounts of new data and information. Okay, it's not a case of traders struggling to find data about trading, and financial markets and investing. Okay, there's actually there's a deluge of information. All right, new traders face with an abundance of data feeds and media sources. Okay, and so what actually happens, especially for fear-based traders, it's easy for traders to be overwhelmed by the amount of information. They can suffer from that analysis paralysis. Okay, it's just there's so much information. One information source is telling you to buy euro dollar, the other information source is telling you to sell euro dollar. It becomes very easy when you're a new trader to be a little bit overwhelmed and not really sure of what to do. And that's where it comes back to just having a very, very sort of simple, robust little framework that allows you to basically to look at any instrument. Okay, any instrument decision. Am I going to be a buyer? Am I going to be a seller? Okay, am I going to sit in my hands? Am I going to do nothing? Okay, and just keeping that as simple as possible so as to stop you from experiencing that analysis by paralysis. The challenge that we have. So, what should a new trader focus on? Well, we're going to touch a good deal part of that in next week's session. But, what I like to sort of talk about is, I think I said earlier on in our session that, it's a case of like as a private trader, you're almost operating like a private hedge fund. Okay, because you have to do the analysis, you have to do the sort of the trades, you have to do the risk management, you have to manage your staff, which is you. It's all of those 4 M's of trading, and the truth of the matter is, with the best will in the world, you've only got so much sort of time and energy in your day to be able to work that. If you look at competition, I said I work with guys and girls who are working at banks, pension funds, okay, investment houses, hedge funds, and invariably, there's and you go into the city of London or Frankfurt or New York, okay, Tokyo, Hong Kong, okay, Singapore. You will see floors and floors like this at banks and funds, okay, lots and lots of staff there, all being able to pour over every last little bit of data that comes out. Okay, and the reality is for ourselves as private traders, as I said, acting as a private hedge fund, you can't fight against that. Trying to sort of my own view is trying to unveil some little bit of economic data that you think that the big banks in the world will have missed is probably unlikely. Okay, is unlikely. It's as I said, it becomes very easy to try and chase you end up trying to chase your tail looking into too much information. Okay, and it just overwhelms you. And actually what you just need to do is just to keep it simple. What you're going to learn over these sessions is that new traders always want to focus on where they get in. Okay, what's their trigger, where's my entry. Okay, but actually as you grow as a trader, what you'll realize is that it's not actually picking the best entries that will help you succeed. It's your money management. Okay, it's the actual money management of your trades in terms of when you have a successful trade, being enabled to actually to sort of allow that trade to generate a good healthy business return for you, and also being able to realize when a particular trade isn't working out, having the wherewithal to effectively to cut those losses as quickly as possible. And as I said, over these sessions over the next few weeks and months, I'm going to touch on these week by week. We'll be adding, think of it almost like little building blocks, little Lego bricks that we're adding in week by week by week to help you sort of come for our last 10 minutes or so. Okay, and I just want to always talk about this big picture recap. All right, you always want to be looking to manage those 4 M's of trading. I appreciate some of you today might be well aware of those 4 M's. Okay, some of you might have never heard of them before. Some of you may be aware of them but have not been given them really the priority that they need to be. Markets, method, money, and myself. Just ask yourself quickly if you think they're all in alignment in your own particular trading at the moment. If you're not, if there's maybe 1 or 2 of those areas you could be doing better, well, that's okay. Okay, awareness is the first part of the solution. Okay, if you realize that perhaps maybe your money management is is not as good as it could be, well, that's okay. You know, we're here these sessions to start to help, to develop, to build. Okay, you know, to work with, to help you adapt and overcome to the challenges. All I'm saying is that, you know, is if you are having a few challenges, well then check where you are in alignment with those 4Ms, because I can assure you, if it's when those 4Ms are in alignment that people tend to do it those best. And it's part for you as a trader to constantly monitor those four areas. You know, that doesn't have to be much. It can literally simply be just, it can even just be a little check-in at the start of the week and at the end of the week about, you know, conversation with yourself, you know, about how you've managed those 4Ms of trading. Maybe give yourself a little score out of 10. How do you think you've managed those 4Ms this particular week in your trading business? And be interesting to see how, you know, how those scores tot up over the weeks and months of your trading career. And you know, what we're going to do is, you know, is through these sessions is really, it's about weaving all those 4Ms together. Okay, you know, every week there'll be a little bit on the markets or the method or the money or myself. Okay, you know, this week we're going to focus a little bit on markets and method. Okay, and next week we'll do a little bit more on markets and method. And as I said, it'll just build week by week. Okay, giving you you know, introduction to how you do this, how you start to master those 4Ms to help you become the best trader you possibly can be. So, you know, what we'll do is we'll have a little look at this Supreme Edition of Admiral's MetaTrader 4. You know, we'll start to show you a couple of little profiles I'm going to use for these particular sessions. You know, looking at a little simple market analysis. If there's any questions, you know, I'll happily take them. As I said, if you're watching this, you know, later, okay, and there's questions, well then by all means, you know, don't be afraid to get in touch with your account representative. Okay, you've got the London number there, 020-7726-4003, or hello@admiralmarkets.com. And this video and many of the other educational pieces are on the YouTube slide, and also there's also a Facebook page for Admiral Markets as well. So, you know, don't be afraid to get in touch with your account representative. They'll be very, very happy to help you explain, you know, explain everything from, you know, the sort of from the platforms to the, you know, the latest ESMA regulations to the sort of next sort of series of educational webinars that we have here. So I hope you found that a little bit useful and interesting. If you bear with me for a moment, I'm just going to swap across to the sort of Admiral Markets Supreme Edition MT4, and we'll start to sort of build up our profiles as we go. See that? I hope you can still all, you know, hear my voice. Hopefully you can still all see the screens now. I've got this is the Admiral Markets MT4 Supreme Edition. Okay, so what we've got here. So what I've done is, you know, as I said, I appreciate that we've got people who are joining us today from a broad range, okay, of experience of trading. Okay, I appreciate some are completely new, some are, you know, are very experienced. So, you know, try to cover as many bases as I possibly can. What I have here is this is MT4. And what I have is, you know, I have a series of profiles, okay, you know, call it almost like the front page of the profiles that I have here that I'm able to utilize. This one you can see here down here on the bottom, I call it the 4Ms of trading. This is sort of a profile I've set up that's going to be covering an awful lot of you know, what we talk about. Gives us this, you know, I've basically put in a lot of FX, some indices, some commodities, okay, also some individual stocks, also some individual cryptos, you know, a broad range from the fine range of instruments that Admiral Markets will provide you to trade with. And we're going to use this, you know, basically what we're talking about to sort of build that picture, okay, build that trading picture. Make sure we're managing those 4Ms of trading to be able to sort of to work and look at that. Okay, so here, you know, here we go. Here's a chart of the pound against the US dollar. All right, so for those of you who are new to trading, okay, I can heartily recommend that Admiral Markets run a sort of a real-time daily trading ideas session every Tuesday morning, 10 o'clock London time. I do the Tuesday morning session, so, you know, even if I can't fill everything in today, I'll try and always add a little bit on my Tuesday morning sessions. You know, and here we are looking at you know, my charts, and my charts are very simple. Okay, I have green bullish candles, red bearish candles. I have a blue 20 simple moving average average. Let's put some cursors on here. A blue 20 simple moving average, a red 50 simple moving average, and a green 200 period moving average. If you really don't know what a moving average is, I'll do a slide or two of it next week, okay, as we build it up. But what we were talking about, if you remember rightly, was just trying to identify, is that market in a trend? Well, I would hope that you could see that in this particular case, that pound against the dollar, having put in a sort of a bit of a double top there, maybe even a triple top you might call it. We can see that since the mid-April, just zoom in a little bit here, since mid-April, pound against the dollar has been in a very nice downtrend. Okay, and remember what I was sort of talking about is that what we've had is a series of we've had lower highs and lower lows. Okay, lower highs and lower lows, and that's as I said, that's the indication that invariably we are we're in a downtrend. So whilst the market has been operating like this, what is it that we're actually looking to do? Well, as we said, when markets are in a downtrend, we're looking to be a seller. And not surprisingly, what's of interest to me today is, hopefully you can see there, is we've had 129, we're trading on there, 129.44. Let me just put on a horizontal level here. Okay, I'm just going to put this on at 130. Okay, and what we can see is a couple of weeks ago, price came down here to the sort of the 130 level, and it bounced off. But when it bounced off, but it formed a lower high. And so over the last couple of weeks, and a lot of this is to do with sterling. Okay, sterling weakness. Remember what I was saying right at the first start. I want to buy strength, I want to sell weakness. Okay, sterling has been weak for the last few months. Okay, and that weakness has only got worse over the last couple of weeks with all the shenanigans that have been going on in the political sphere in the UK. Okay, with Theresa May sort of treachery in terms of the way she's operating, throughout the Brexit negotiations. So of course, with people seeing that happen, it was not unsurprising. Big traders. Okay, they're nervous. They're nervous about what's going on in the UK. In terms of the way that it's being handled in terms of the Brexit. So, what do you think? What do you think those big pension funds are looking to do? The big pension funds, the big banks. Okay, they have been selling sterling. Okay, which is why we're getting this nice downtrend here. The dollar has been strong. Okay, sterling has been weak. That's remember what I'm looking to do as a trader. I'm looking to buy strength and sell weakness. So if I'm looking to do that in this case at the moment by shorting, okay, that means you're selling sterling weakness and buying dollar strength, and that's the place I want to be. And then at the weekend we had Liam Fox, okay, made a comment about how there's now an increased chance of a sort of a no deal Brexit. Okay, and not surprisingly, there we saw that as the markets there. Okay, sort of 8 o'clock there. Okay, London time, we can see that basically price sort of crashed way through that 130 again, and has just fallen down there quite strongly. Okay, down to what's that, down to being a low of what's that, about 129.19. Okay, so we've got 80 pips through the 130 level. Okay, so this is that's a case of we know the market is in a downtrend. Okay, we knew the market is in a downtrend. We had you could see it was very clear to anybody looking at that chart that market's in a downtrend. So you want to be a seller there. We knew that particular levels of support and resistance, which is what we'll touch on next week, become kind of interesting. This is a big round number, 130. Okay, 130. So once it's broken there, okay, then that's quite significant. And it's that linking of sentiment. Okay, people aren't very confident about sterling at the moment. Okay, so the people who are working off sentiment, they're going to be short. And then you've got that element of geopolitics. Okay, when the sort of political situation in the UK is causing and driving that kind of that kind of sort of shorting, that kind of lack of enthusiasm for sterling. All right, so when you get all of those elements coming together, and that's the case of not surprisingly, that we're seeing that that kind of particular sell-off happening there in the pound against the dollar. So hopefully that gives you a little bit of insight into what the kind of concepts that we've talked about, okay, during the slides, and then also a case of when you see how it's operating in action, in real live action. Okay, Pound against dollar, nice downtrend, making lower highs, lower lows, okay, breaking levels of support. Fundamental news isn't great, the geopolitical news isn't great, the sentiment is weak, okay, and the technical charts are showing there. It's a case of buying strength, selling weakness. Keep it, as I said, keep it as simple as possible, okay. And for those of you who are let's say more experienced traders, you might notice that on the particular charts there, I don't really have not really any indicators on there as such. Okay, remember what I was saying about simplicity is key. I want to try and keep it as simple as possible. Okay, and and that's what what I want to do. And here's another little chart for you, okay, that we can look at. So this is China, okay. This is the Chinese stock market. This is the weekly chart here, okay. Just bring on the cursor to the weekly chart here. We can see that actually, throughout 2017, okay, what do we have there, okay, on price is making higher highs and higher lows, higher highs, higher lows, and and it all looked a little bit rosy. We had a rejection candle here, okay. We had a strong rejection candle, and it came down a little bit, but it made a last push up. And then what happened is, we kind of rolled over there. And then, this was the sort of end of January, start of February. We had a little bit of a sort of a pullback, a little bit of, what everybody thought might be a little bit of, correction there. Okay. And that happened across most of the global indices. But whereas the American indexes and a couple of the others have actually came back very strongly and pushed to new highs, the Chinese one, as you can see, invariably that has not happened. Okay, we can actually see that what's happened is prices continue to drift down. Okay, and once again, it's been making lower highs and lower lows. All right, that's just confirming that this year the Chinese stock market is in a downtrend. Okay, it's in a downtrend, and that has implications. Okay, we can look at the there's lots of let's say sort of fundamental data about China that doesn't look necessarily as rosy as it has been. Okay, so that all adds to the element of it. Okay, then of course there's the conversations that Trump and Xi have been having, and about the possible trade war that China and the US are engaging in. So once again, it's those areas of the market analysis all coming together. The fundamentals, okay, the technicals, the sentiment, right, and the geopolitical. Okay, all of those four elements coming together. Okay, and then also having that knock-on impact on we can see there on the kind of the Chinese stock market this year. Okay, so we've had a little bit of a rally, but what we'll do is maybe one of the next weeks we'll have a little look at the sort of Chinese yuan as well. Okay, see how that's had an impact on it, because that then has a knock-on effect to the US dollar. But hopefully you can see that that's just been this year has just been, go down to the daily chart, that has just been a downtrend. Okay, we've had a little bit of a rally here. Okay, but we don't know if that is just we don't know if that's actually the end of it, or whether that could just be a little bit of a sort of a bearish flag pattern on an extended move down. We will keep an eye on that, okay, and cover that. But I think the message I'd like new traders to take, okay, and new traders, intermediate, old traders, is that a good trend will leap off the chart at you. Okay, the pound against dollar here, you're looking at the Chinese stock market. Okay, that is that's been in a downtrend. Okay, and so as I said, we keep it simple. All right, if the market is in a downtrend, okay, we look to be a seller of it. Okay, if the market is in an uptrend, okay, well then we look to be a buyer. Okay, we're just looking to do that, and we'll just finish off by looking at something that's in a range bound. Okay, euro sterling, which is something that I have traded a good deal myself over the years. Okay, but realistically over the last few months, it's not really been a huge amount of joy to be had on euro sterling. And if I just look there, okay, so since about September of last year, okay, prices realistically just not really done a huge amount there. I'm just going to draw in a couple of levels there. Okay, let me just tidy this up for us. So here we go. I'm just going to, this is big sort of big line, big number of 90. Okay, 90 cents to the sterling. we go. So it's just a little bit above it. And then what we'll do is we'll take it down here, okay, which is for those of you who join me on the real-time daily ideas, you will talk about, you'll hear me talk a lot about that kind of 87.50 level, all right, which was pretty significant support there, okay, for the good part of that year there. Okay, there we go. So we can see that price has just really has been knocking about between those kind of two levels or so for the last into August, so nearly a year now. Okay, nearly a year. And this this links into the geopolitical situation. Okay, as the UK and Europe sort of are going through the sort of Brexit negotiations. Okay, not surprisingly, people are very wary. Okay, because they're waiting to see what happens, and you can see that hence the price isn't really particularly trending. But there's quite a few spikes there because invariably you get Boris Johnson come out and say something foolish on the TV, and that can have a spike both either for or against sterling. Okay, depending upon what he says, and that basically makes people very nervous. So if you're a trend following trader, okay, if you're if on a longer time frames, if you're a trend following trader like me, well, trying to trade euro sterling at the moment is a pretty pointless endeavor because it's a pretty much range bound market. Whereas if you are as a general rule, your method is to trade range bound markets, well then this is the land of milk and honey for you, because this is exactly what you like to see. So once again, it's a case of the market environment. It's important for you to understand and know what that market environment is. Okay, and if you find yourself looking at a chart of anything and not being able to decide if that particular market is trending, the reality is it probably isn't. Okay, it probably isn't. Okay, it's simpler than you think. Okay, don't fall into that ploy of overcomplicating it. So I talked earlier about Paul Tudor Jones. Him talking about being in the Market Wizards book. Another very, very good trader who's in that is a guy called Ed Sikota. He's a very well known, very well regarded trend trader, and I think he talks about that in the book about how he would sort of draw or print off his charts. He'd stick them on his wall and then go and stand on the other side of the room, and if he would be looking from the other side of the room to see whether whatever he was trading, probably commodities, whether that was in a trend. And if he couldn't tell if it was in a trend, he didn't trade it. If he could see that it was in a trend from the other side of the room, well then he knew that was something that he needed to trade. Okay, and that might sound a little bit simplistic, but actually it works. And it made Ed Sikota a very, very successful person. Okay, so it's a case of if you are new to it, just your takeaway is just to go away, take a few look at just some charts. Okay, as I said here on our 4 M's of trading, which we'll go into more and more over the sessions. I've got some of the major equities, some of the FANG stocks. I've got most of the major indices, okay, most of the major commodities, most of the major dollar currencies, and it's most of the major cryptos. And as we go through week by week, we'll start to be sort of overlay some of the points and concepts that we talk about in, let's call it like the slides of our sessions. All right, so take away, just look at a few charts. Can you look and identify if there is a trend? And there are a series of higher highs and higher lows. Is it a case of a series of lower highs, lower lows? Are you looking at a chart and completely confused and can't tell whether it's going up or down? If you are, I'll tell you, it's not doing anything. Okay, it's not doing anything. Don't force it. Don't try it. Don't push it. Okay, because I can assure you, if you're having to force anything, then invariably it's rarely there. Okay, good trends, okay, will leap off the chart at you. Okay, and that's it. They don't happen as often as we would love them to, but when they do, you can see them, they're there, and invariably that's what we're looking to do as a particular as let's call it as a new sort of swing trader. That's what we're looking at. Okay. So if I look at, finally, I've got a couple of minutes. Okay, just looking at gold there we go, because this is a great example of I've talked about this for a good while over the on the sort of real-time daily trading ideas. Is that for the start of the year, so we have you can see the green box here, the rectangle I had. Let's just move this. actually, you know, for we had a real rally in December, and then for the first 4 months of this year, gold was in and it was in a box. Okay, it was just consolidating there. Okay, it was a range, you know, it was a range market. So once again, if your method, okay, if your method is to be a range bound trader, well then that was great market for you. Okay, that was, you know, that was a lovely market. Okay, every time, you know, every year sort of time price got down to around about the 1300 area, people were buying it. Okay, every time it got up to around about the 1360, 1370 zone, you'd look to be a seller. You know, and that worked right up until it actually broke out. And we can see here it broke out, you know, it fell down, it went through the 200 period moving average on the daily chart, okay, which had acted as support. And then it came back, and then, you know, what was support became resistance, and then price broke down again. And that's, you know, that's what we've had. Okay, then we've had for the last few months, we've had a really lovely downtrend there in gold. Okay, lovely downtrend in gold. You can see that. Okay, making lower lows, lower highs. Okay, so when a market is like that, well, you know, it's your job to be a seller. Okay, you don't want to have to try and fight it. Okay, that's a great example there of, you know, two types of market environment. Okay, you know, range bound, and then, you know, then a trending market. Okay, and as I said, you know, it should leap off the page. If it doesn't, if you don't get it, then leave it alone. Okay, look for the charts like this. There you go, ladies and gentlemen. We've overrun a little bit, but I always kind of like to try and go through a few charts and keep people a little bit, you know, on the toes and stuff. Plenty to look at. There's always lots to look at, even in a quiet month like August. So I wish you the best of success with your own trading. I look forward to seeing you next Monday. Okay, as we'll start to once again just add a little bit more to our particular layers. For those of you who are, you know, you can join me on the real-time daily trading ideas. My session is Tuesday, 10 o'clock London time, and again, and what I'll be doing is the sort of elements that I talk about in these sessions, I'll be actually utilizing them in the real-time daily trading ideas, and actually putting up specific trade thoughts. So great to be able to speak to you. Look forward to speaking to you next Monday, and I wish you the best of success in your own trading, and I'll speak to you soon. Many thanks.